G'day. We are live on Lunch Money. That ended a little bit more abruptly than I was expecting. Welcome to Lunch Money. We are your online and social media home for special situations, workouts, and capital raising professionals. It's been a little while since we've done one of these like this. The last couple of Lunch Moneys we've done with a live audience, and that's been a bit of fun. But today we're doing something a little bit different. Well, a little bit different, except the way we always used to do it. And we're going to be talking about small business restructuring. And I have a leading small business restructuring thought leader joining me today to help us learn all about small business restructuring. And that's Louisa Sijabat. How are you going, Louisa?
Very well, Nick. Thank you for having me.
Now, you have now got Merchants Advisory. How long has that been going for?
About 18 months now. The time goes quickly and slowly at the same time, Nick.
It sure does. It sure does. It goes too quickly. Now, listen, Louisa, the reason I wanted to talk about to you about small business restructuring is that I know that firstly, you're doing a lot of these yourself. And secondly, anybody who sees you on LinkedIn or social media knows that you're an excellent communicator. You do a wonderful series of explainers on the socials. And so you are the perfect person to talk to communicate in language that everybody who is not an insolvency practitioner can understand. So thank you very much for giving us your time. Now, I was intrigued to see this slide. Oh, well, I created this slide, so I wasn't that intrigued, but I was intrigued to see the numbers appearing on this slide for small business restructuring. As you can see, when it started out back in 21, nobody was doing it because we were still in COVID, and there was no need to restructure. Accountants were telling their clients not to pay the tax office. I mean, that's as dreadful as that is. That's a fact. That's what was going on. Then as we sort of started crawling out of COVID, the numbers started going up, and there's been an explosion in these small business restructuring numbers of late. And I just checked the stats earlier today before going live. And do you know, in August there's been 205 small business restructurings in August. That's in 15 days.
I did not know that.
Yeah,
and we're only partway through.
We're in the Ides of August. So, Louisa, we deal with a lot of commercial finance brokers, a lot of accountants, and they don't know what small business restructuring is. So, what is small business restructuring?
Sure. So the way I explain it to potential clients, which is the way I explain it to anybody who's not familiar, is that it was a process brought in by the Australian government in 2021, so about 3 years ago now. And its aim was to help small businesses who had been weighed down by legacy debt, who would otherwise have to close, to try and help them find a way forward to survive. So what it is for small businesses that meet certain criteria to define them as a small business, to offer to their creditors some amount, usually lesser than the amount in full and final settlement of their total debt. One of the reasons that this process has been so popular and so successful recently, especially in the last year or two, is because the ATO are trying to be very, very supportive of the process. And they've said publicly they're trying to say yes to small business restructuring proposals put in front of them, unless there's a company-specific reason where they feel they ought to say no. So it's had great take-up amongst small businesses who basically would need to be in a company format. So this is not applicable to partnerships or sole trader ABNs. So in a company, either a PTY limited company or a limited company, the company can be trustee of a trust. That's fine. Total debts have to be less than $1 million. All the company's tax lodgements need to be up to date, and all their employee entitlements need to be paid up to date as well. It's ideal if the company has a viable ongoing trading business, but it's not mandatory. It can be used for companies that have ceased operations as well.
Okay, so in a nutshell, I'm a small business.
Yep.
And you've got through COVID, you've sort of struggled through COVID. Maybe you've survived, but really you're carrying a lot of legacy debt.
Yep.
Uh, and you got a couple of options. You can either close the doors or try and do a deal with your creditors. I mean, it's effectively a deal with the creditors. They're going to get cents on the
Yep.
dollar. Now, in order
Yep.
for a small business to qualify for this, well, firstly, let's just in a nutshell, and just this is
Yep. Yep.
the person on the street, not the
Yes.
technician.
Yes.
What is the difference between small business restructuring and voluntary administration?
Yes. So small business restructurings are a way that small businesses who meet the criteria can try and survive by restructuring their debt, ideally reducing their debt and giving them time to pay. During a small business restructuring, the directors of the company stay in charge of their business, which is key. I don't know about running a restaurant, a hospitality venue, a retail shop as well as they do. So I'm really glad to see that that's part of the process. In a voluntary administration, if perhaps myself, if I'm appointed voluntary administrator, I am required to come in and be in charge of the business. Now, this is one of the key distinctions, and I think one of the key reasons for the success of small business restructuring. They can keep trading through the restructuring process. You can restructure a company either way, a small business restructuring or voluntary administration, but the director staying in control is one of the big advantages and big differences with small business restructuring.
Okay, so a small business owner is talking to a finance broker, and obviously the finance broker doesn't want to take on all the risk of giving advice, but they say, "Oh, look, I'm thinking of going into administration." The thing is that under administration, you're the controller of the business. Louise is the
Yeah.
controller. Under a small
Yes.
business restructuring, the director stays in control. So I know that the purpose of this thing was to reduce the costs because it's a
Yeah.
lower cost option. But just as you explained it to me, it's just occurred to me that one of the reasons it's a lower cost option is that you don't have to take all the risk of trading. So I suppose if you do take
Absolutely.
over a restaurant or an earth moving business, whatever it might be, you don't have to make an assessment as to what your personal risk is. Louisa's personal risk is to trade the business on. If the director wants to
Correct.
take that risk, they can. So I
Yeah.
guess that makes it a lot more, reduces your costs as well.
Absolutely. And the customers are usually happy to trade on with the same person or people in charge that they've always dealt with, because that's
Yeah.
why they chose to work with that company in the first place.
Now, just out of curiosity, then, so firstly, we haven't really talked about the qualifiers. So, if you've got a business that's got $5 million worth of unsecured debt, this option isn't available to you. You mentioned before that you have
Correct.
to have all your tax lodgements up to date, and there's certain other
Yes.
boxes that have to be ticked. But one of them
Yes.
is that the debt has to be less than $1 million.
Yes. And that's total debt, because
Yeah,
some of the debt of each small business will be debt that's eligible for restructuring, for example, ATO debt, sometimes even
right.
supply debt. But some debts are not eligible for restructuring. But when we're looking at the qualifier, the $1 million debt, that's total debt of the company. So that does include secured debt. It does include financed assets, so finance vehicles, finance plant and equipment. Even though those debts are not typically restructured, we have to include total debt up to $1 million.
Now, it's interesting that you say that, because that is a bit of is that contentious? Because some people I've spoken to are saying that it's, let's say, for example, there's a lease on a motor vehicle. So some people I'm speaking to are saying, well, it's the value of the debt minus the value of the asset. So if you had $5 million worth of if you had $5 million worth of motor vehicle debt and $5 million worth of motor vehicles, but only $500,000 worth of other debt, you qualify. But you don't take that point of view?
No, so I do believe it's interpreted as total debt,
Yep.
not debt to be refinanced. Oh, sorry, not debt to be restructured.
Yeah.
So
Yeah.
I do believe it's a total debt number, which sadly does put some people in that situation out of contention, even though the debt might be fully secured against vehicles or assets.
Now you're familiar with that different perspective?
Yes, yes,
Yeah.
I have come across
Okay.
that before.
Yeah. That's interesting. That is very interesting. Well, I'm not going to solve it, and but it'll be interesting to see. I guess it's as we always say, we need a court case to solve that one, don't we?
Yes,
Um,
it's one of those things that unless it's clarified whether through the law or through the court, um, uh, I do stick with my interpretation, but I
yeah.
am well aware that there are other interpretations as well.
Now, at the risk of putting people to sleep talking about associations, there's the AIIP, and then there's the ARETA,
Yes.
and there's someone else as well. What do they say? Like, does the AIIP taken a stand or on what the correct interpretation is?
To be honest, I am either not sure or can't remember exactly who says what.
Yeah. Okay.
I've just known that as we go about our practice, this is
Yeah,
the recommended approach, and so
yeah,
we've gone
no,
with
no,
it. So
that's
I
all right.
can't
That's all right.
exactly recall who said what.
I didn't mean to take you down that little rabbit warren.
No, not at all.
So if you've got a small business who does qualify for small business restructuring, under what
Yes.
circumstances would a voluntary administration be more appropriate?
Um, very few.
Yeah.
There would have to be. So one of the qualifiers for a small business restructuring is that all employee entitlements have to be up to date. Oh, you said if it does qualify, so they would be up to date. Because sometimes a small business that might have less than $1 million in debt might have quite a significant super debt,
Right.
where then that makes them ineligible for small business restructuring.
Yeah.
However, if they meet the criteria for small business restructuring, I think it would be very rare that I'd recommend a voluntary administration.
Okay.
The facts and the situation and the process for small business restructuring is just a lot smoother, where it generally is recommended. A voluntary administration is absolutely a fantastic tool, but
Yeah.
typically now for larger businesses or where there's any complexities that can't be dealt with, but I can't think of any off the top of my head. So we're generally
Okay.
going with an ER where that's possible.
Okay. So from the layperson's point of view, the small business, it's a genuine small business. It's got less than $1 million worth of debt, and the only way
Yeah.
it's going to survive is by doing a deal with its unsecured creditors. And
Yes.
usually the largest of these unsecured creditors is the Australian Tax Office. So
Correct.
how does that now? So they need to put the deal together. So who puts that deal together? Do you put that deal
Yeah.
together? Does their accountant put that deal together? Then that deal's
It's
called a
usually a
plan, right?
three-way collaboration. Yes, that's
Right.
right.
Yeah.
It's a restructuring plan proposal, and it's usually a three-way collaboration between the company and its directors, its accountants, and us. So usually the company has some sort of indication of what it might be able to pay in terms of once it pays all of its ongoing operating costs, including its tax liabilities into the future, what kind of cash flow is available to put something towards the historic debt. And usually the directors do have at least a gut feel of, yeah, we can kind of do that number, or no, we can't. Their accountant usually helps to formalize that into a cash flow forecast and other financial reports historically and anything future that might be required. And we'll help guide on what the ATO or creditors' expectations might be to the extent that we know, to try and get a proposal that is both able to actually be carried out all the way to the end by the company, as well as something that's acceptable to creditors. So three-way collaboration.
So I guess the accountant and the director come up with a plan, and you might look at that plan and say, well, look, that's not going to fly. That might
We're,
fly.
we're usually involved at the conversation stage
Yeah.
as the plan is coming together anyway, of is this reasonable? Quite often the question is, what's the lowest we can offer that we think creditors would actually accept?
Of course. I
Um,
mean, it'd be very surprising if that wasn't the first question.
and look, it's a
Yeah.
realistic question, and
Yeah.
part of our role is to provide our feedback on what we have seen creditors accept and guide the company to help it survive as best as possible.
Now, and the ATO, what's the ATO's attitude? Has the ATO's attitude changed toward these? I mean, depending on who I speak to, they say, no, the ATO loves these and they're approving everything. And then I've spoken to some people and they say, no, look, the ATO is actually pulling back. I spoke to someone the other day and they said, well, one of the things that the ATO doesn't like is where, let's say there was $1.2 million worth of ATO debt. Someone makes a lump sum payment of 300 grand to bring the debt down so it qualifies for SBR, but then that puts the ATO in a position where they've received a payment preferred ahead of other creditors. I mean, what is the ATO's attitude? Is it changing?
I think both the statements you said at first are true, actually, Nick. The ATO publicly said that they're approving about 90% of the proposals put in front of them through the small business restructuring process. So as a professional in the space, that's a very, very high percentage, which is great to see. And the ATO have said that they are trying to say yes, unless there's a company-specific reason to say no. Have they been pulling back? They also have been, because under the small business restructuring process, you are allowed to offer your creditors in instalment payments up to 3 years, so 36 months. And perhaps a year and a half ago, the ATO were quite easily accepting proposals at the 36-month mark, so equal instalments over 36 months, no additional interest charged. For some percentage of the debt, which could, for example, in a number of my cases, be about 25 to 30% of the debt. So in many ways, it's a very advantageous proposal to the creditors, to the ATO, because sometimes if this company were not to be able to get something like that approved, they might be closing down and there might be no payment to the ATO at all. Now, they have been pulling back, though, because about a year and a half ago, 36-month proposals were quite easily accepted. And then it kind of went to the ATO giving informal feedback of, could this client propose over a shorter period? So it went to about 24 months and quite a few of them were approved. And now the ones that we have been proposing at 24 months, they've been saying, can the client do a little bit shorter? And we know that they're accepting them at about the 18-month mark at the moment.
Well, if anyone from the ATO is watching this, I'd quite like them to say we want all our money up front, if it's 20 cents or 30 cents, because it's interesting. We have not seen a lot of these. Now the SBR, it's a little bit below our normal lending threshold anyway. Like, we don't do funding for 100,000 or 200,000, but certainly 500,000 upward, it starts getting interesting for us. But we certainly haven't been knocked over in the rush. People saying, listen, we've just gone into SBR, we need someone to fund our plan and give us working capital going forward. But I guess if the ATO's been offering 3-year terms, it's not a surprise. But they are pulling those terms back.
Yes, they very much are. 3 years is not really a plausible offer to them anymore. They consider it too risky and too uncertain, which I can understand, because for each proposal we put forward for each company, this company has already had an accumulation of tax debt. So I can understand the ATO's point of view of it being risky. Of course, as we advocate for the clients, we do try and get as long as possible, but it's sitting at about the 18-month mark at the moment.
And one of the other queries I have is when it comes to voting. So the plan goes up. So as you said, the accountant and the client and the director of the business, or the key stakeholders of the business, and they put a plan together. You're sort of marking their work, I suppose, to some extent. And the plan goes up. It gets voted. It's got to be voted on. So how does the voting work compared to, in a voluntary administration, the creditors vote? And so how is the voting for a small business restructuring, SBR, how is that different from a voluntary administration vote?
Yes, in many ways it's simpler because it's just on a form. So it's on a piece of paper, the creditor votes and returns it. So in a voluntary administration, the voting must be held at a meeting of creditors. So it's live. So a lot of creditors find it more convenient to just return a slip of paper at their convenience. They have typically about a 3-week window to do so. So they can usually find some time if that size of debt materially matters to them, and if they wish to participate in the process, so it's a lot more convenient for creditors. And it's simply if there is a majority of voting creditors that vote in favour. So it's a much simpler system because in voluntary administration, we're looking at majority in value of creditors voting plus majority in number. So in many ways, the small business restructuring voting system is simpler as well, which is a welcome change.
So people are telling me that, now, just before I ask you the next question,
yeah, sure.
I'm just going to give you a code word. Now, there's going to be 2 code words. The first code word is tax, and I'll explain later why there's 2 code words at the end. I'll tell you all about that. But the first code word is tax. I'm going to write that down before I forget it. Now, people that tell me that in an SBR, really, if the ATO accepts it, it gets up. If the ATO doesn't accept it, it gets down. It's almost like the ATO has one. There's only one vote that matters, and it's the ATO. So just reflecting on what you just said, is that true?
Typically, yes, because the voting is weighted according to each creditor's debt amount. And with the small business restructuring, we're seeing very commonly that the companies entering into the small business restructuring process have solely ATO debt outstanding or primarily ATO debt outstanding. That means the ATO pretty much carries the vote, and then that's the consequence that you've been seeing.
So simply by the fact they've got the biggest debt. It's just as simple as that.
Yep.
Now, you obviously speak to a lot of accountants, and I guess from time to time you'll also be speaking to finance brokers and financiers for that matter.
Yes.
I mean, what are some of the biggest misconceptions about SBR that you're encountering?
The biggest thing at this stage still is just not knowing about them, not knowing that the option's available or to what extent it might be able to help the client. And if they do know, then some of them know very well, and I don't disregard that at all. But if there's a biggest misconception, I'd say it's just not even a misconception. It's just not knowing about the option being available to their clients.
Now let me. Okay, so that's the biggest misconception. I'm just wondering let's just put the shoe on the other foot for a moment now, and you get a phone call, and it's from a fuel supplier company that supplies fuel to a transport company, and they say, Louisa, I've just had a phone call from one of our customers. They're going into an SBR, so I'm a creditor. What does that mean? What does that mean for me as a creditor of someone who's gone into an SBR?
Yeah. So let's assume that they have a debt at the date of the small business restructuring. For easy round numbers, I'm going to say $100,000. So what happened is the debt at the date that the small business restructuring starts has to participate in the small business restructuring process. So whatever plan is put forward, for example, 25 cents in the dollar, 30 cents in the dollar, this creditor gets to vote and have their say as to whether they want this plan or they don't. So that's the first thing. The second part is that they have their own decision to make about ongoing supply. So they may choose to continue to supply the business, or they are entitled to stop supply. It depends on the terms of the agreement and what their own operating and internal policies are. We've seen both situations. In some situations as well, while their debt may have to participate in the small business restructuring process, sometimes for key supply accounts, whether that's key suppliers, and just say if it's a transport logistics business, fuel is probably a key supply. There is nothing to stop the company once the plan, assuming the plan is approved, there's nothing to stop the company also paying the balance of the debt. It's just that they're correct. So it's just that they're legally obligated that the debt must participate in the small business restructuring process, and they are bound by that plan. But there's nothing to stop the company paying in full.
Now, when the company's in the voluntary administration and it's in that administration period, if I'm a supplier, again, let's say I'm the fuel supplier, it's in administration, and Louisa is the administrator, and Louisa says we want another, 2,000 litres of fuel or whatever it might be. Me as the petrol supplier goes, well, that's great. I know I'm going to get paid on this because Louisa has basically personally guaranteed.
Correct. This administrative personal liability, correct.
Yeah. Now, but under an SBR, you're not making that phone call, or you're not signing that order. Correct. It's still the director. So am I at risk if I'm trading with you before the plan's been entered into? The suppliers remain at risk for any further debt?
Yes, that's right. Because only the debt that's been incurred at the date the restructuring process starts is part of the restructuring process. That's why the supplier has the choice as to whether they choose to trade on or whether they don't. And a lot of that depends on their working relationship with the company and, frankly, if they think they'll be paid. If they do and they choose to trade on and just say things don't go as planned and trade stops at some point in the future or they're not paid, that amount has been on risk. And there's, other than recovery in the usual way against the company, there's no recourse for that debt because it's the company trading on, not the small business restructuring practitioner trading on the business.
Yeah. So I guess that's another reason why insolvency people probably have learned to love these things. Whilst it may mean lower fees, it means a lot less risk, and all of that does mean that there's a better chance of the company making it through, I suppose.
Yeah, the odds of a positive outcome are very strong. And part of that is due to the ATO support, and part of it is due to the fact that business can continue as usual, because especially in a small business, that's where a lot of the value sits, in the ongoing trade.
And look, this is all very good, but what are the opportunities for finance brokers and for humble financiers such as myself? We've suggested that with these SBRs, the same as administration, we can provide funding to do a one and done payment with the creditors and to provide working capital ongoing. I mean, what are you seeing?
Yeah, so they are the key opportunities. So when a proposal is being put together, is there the option for the company and is there the desire to just get on with their lives, do one lump sum payment and then just sort out normal finance in the course of their ordinary business? So there is an appeal there for that. Another part is what you mentioned as the working capital funding, which is, you may recall I said that one of the criteria in order to propose a small business restructuring is that all employee entitlements have to be paid. So some financiers are choosing to advance funds to pay the outstanding superannuation or whatever else might be outstanding with employee entitlements so that the company can be eligible, and then also proposing financing for the restructuring proposal and sometimes tying it together as one product. So there definitely are opportunities for business directors to use financing to help them get through this situation.
And I would just take the opportunity to do a little ad for Hermes that if you've got a situation that needs working capital funding going forward post restructuring, and you need to pay down those employee entitlements and maybe get rid of a creditor along the way, a secured creditor. I'll come to that in a moment. I've just got to get in touch, obviously. Get in touch is the message.
Absolutely.
That's the call to action. So just a few more questions. Now I've got what's the situation with grouping? So if I've got three companies and each of them have got $900,000 worth of debt, can I put them all into small SBRs, or are they grouped?
They are considered as individual companies, but if there's common directors, you typically can only do one SBR every 7 years,
Right.
unless you're doing them together within 20 business days of the first. So first one to last one, 20 business days. But this only applies, and you can only do more than one, if they are holding companies or subsidiary companies. Essentially, they have to meet the related body corporate definition in Section 50 of the Corporations Act. So we're getting a bit specific for a general lunch money chat, but there are some criteria that need to be met, but you can do a number of companies together. The $1 million limit applies to each company separately, and they're evaluated separately. So, for example,
yep.
We did a group of 6 hospitality venues, each one in their own PTY limited company. And the debt is evaluated per company as up to the $1 million. So we actually ended up, I think in that case, with more than $1 million totally wiped out for this group because it was across a number of entities.
And but there was a common director across all those entities?
Yes.
So within 20 days, they tip the whole lot in, but after 20 days, they've got to wait 7 years. Am I reading that correctly?
20 business days.
Yep.
And you either do them all together or after 7 years.
After
but
7 years.
there's you have to get through today before you can get to tomorrow, before you can get to 7 years, of course. But in order to tip them all in now, they do have to have a strict holding subsidiary and certain criteria type of relationships. A common director is not enough to tip them all in together. They have to meet some definitions around holding companies and subsidiary companies as well.
Okay. Now, there is something of a stigma attached to a voluntary administration. Is there a stigma attached to SBR, do you think? Or the same stigma?
I think there's possibly a little bit, but it's less. Because a lot of the perceived stigma is around what will my customers think, what are my key stakeholders, key suppliers, key partners in an external sense, in a broad sense of the word. What do they think of me going through this, and will they keep trading with me? And because of the way a small business restructuring is set up, a lot of that is reduced, where the directors can stay in charge and communicate with those parties before a small business restructuring as well as during, to say, no, it's all good. You'll be paid at the end of the month like usual. There's nothing to be concerned about. We are just sorting out ATO debt because we need a restructure to do something about that. You'll be paid as usual, no problems. Right. So a lot of the perceived stigma is lower. For full disclosure, it does appear on a company's ASIC search. So some credit departments of suppliers, banks, things like that, probably do get an ASIC feed where they do know. But to address situations like that, part of our process is to work with the company to identify who they might like to ring and have conversations with ahead of the process happening to mitigate those sorts of risks, and also reduce any perceived concern or stigma.
Yeah, okay. But with an administration, any communication is administrator appointed, but yes, under an SBR, that doesn't happen.
It does say restructuring practitioner appointed, actually.
Oh, it does.
That seems to be perceived in a different way, which is a good thing.
Yeah. Okay. Well, I guess there's so many of them, that if you're any kind of major supplier, you've probably got a bunch of them going on with your customers at any one point in time. Now, what about secured creditors?
Yes, so secured creditors typically don't participate in the small business restructuring process. If they are forecasting a shortfall, as in if they're forecasting the value of their security to be lower than the value of their debt, they are entitled to participate for the shortfall amount. But most secured creditors have done their due diligence and taken the security they need to take, which means they usually don't have an anticipated shortfall. So what that means is if there's no anticipated shortfall, there's no need for them to participate. And in fact, they can't participate because there's no shortfall. So a lot of the time, the secured creditors will be perhaps observing, perhaps receiving the correspondence, but not taking an active role.
I'll ask you maybe if you can give us one story of an SBR that's not gone the right way, and maybe you could tell us why that was the case, and maybe one story about one that was a fabulous success and what made that a fabulous success. So start with the failure first, and maybe one that you've heard about anecdotally, because I'm sure that none of them would have been yours, but
I have only had one not be accepted by its creditors, and we entered into this small business restructuring having been very, very clear with the director that we did think that there were some potential deal breakers as to, in this case, the ATO being able to accept his proposal. However, what he said to us was, if this isn't accepted, it's a liquidation for me, so I may as well give it one last roll of the dice. And so we entered into the small business restructuring process knowing this. So I believe there were a couple of ATO audits that had not gone favorably for this company. And the ATO had, I believe, issued deemed assessments and then issued a winding up application. So the ATO's one of the ATO's main reasons for saying no, so those 10% or so that they say no to, they've publicly said very poor compliance history is one of their main reasons. So nothing about this company demonstrated a glowing compliance history. However, because the alternative was a total close down anyway, the director said, I'm willing to spend some money to give it a try to see if it can be safe.
So just it's a roll of the dice. And that now you seem to qualify very poor compliance. So just
yes.
Poor is okay, but very poor is no good.
The ATO hasn't told us exactly where that line is, but just from having put a few of these forward for clients, multiple broken payment plans doesn't seem to be a deal breaker.
Right.
BAS late here and there doesn't seem to be a deal breaker. Not having a payment plan and having been a little bit silent with the ATO doesn't seem to have been a deal breaker. But the ATO has given an example of very poor compliance history. They say this was a real case that was put to them, that the company had been in existence for about 5 years, paid $0 tax in that time, done a scattering of lodgements, done all the lodgements in the 2 weeks before proposing a small business restructuring proposal. So the ATO said that's very poor compliance. Yeah, it does kind of get interpreted as it seems like you weren't trying.
Not that we advocate any of the poor, any of the stuff they seem to be waving through.
But you
and they could change their attitude on that at any point in time.
Yes, of course, like any of their internal mandates, of course.
And what's a great success story?
Yeah, I talked about the 6 restaurants. They're one of my favorites to date because it made such a difference to this group. They had suffered the consequences of COVID and mandatory closures, and they had actually signed leases immediately prior to COVID, requiring them to open during 2020, which was just so unfortunate timing, and it really genuinely wasn't their fault. They had some good businesses, the ATO debt had built up, they'd paid all their employees, they'd kept on as many of them as possible, but they had this ATO debt issue in a number of their venues. So they put forward a proposal which the ATO accepted, and it has reset the cost base of this company so that it can continue to trade. Winter especially is a difficult time for hospitality sometimes, and to go on and thrive. And it means that financially the creditors are getting more than they would otherwise if all these venues had to shut down. It quite genuinely wasn't the director's fault. Nobody that I know of foresaw COVID, or at least in the way that it happened. And on a human level, it's just very satisfying and very heartwarming to be able to help people go on and thrive.
Very good. We save jobs and all those other good things as well. Listen, we'll finish up with this last question. If I'm a finance broker or an accountant and giving advice to a client before they pick up the phone to you, obviously they're going to advise to give you a call. But what are the things that they should do to help the client along through the process? And maybe in terms of what are the things they could do to help the client along the process? Maybe preparing them for this process and making sure that there's a successful outcome.
Yeah, look, even just picking up the phone and saying, hey, this small business restructuring thing could work for you, even if they don't know much about it. Go speak to somebody who does. And that would be doing such a service for the client, because it may be applicable, but it may not. And if they can get that proper evaluation, that can sometimes change the world for these clients. The other part is if they are going to go down this small business restructuring path, to be open and collaborative, as most accountants naturally are actually, because there will be a great deal of financial information that the ATO or creditors need to see or want to see in order to consider such a big write-off of debt. Because if the write-off of debt is 70 to 75%, that is significant, and I can understand why there is the desire to see a lot of detailed financial information. It's financial information for the past 3 years. Sometimes it's even down to individualized line item ledgers by line item. So being ready and having at least some availability or capacity for someone at the accounting firm to be able to help provide that information. And
so tidy up the books, make sure they're legible so the ATO can make an informed decision.
Absolutely.
And they're going to be disposed to making a decision in your favour, but try and make it easier for them, I suppose.
Exactly, 100% that, helping the client also with preparing their cash flow forecast typically, and also just having that operational performance, business performance conversation with the client to say, okay, even if the ATO say yes, what are we actually going to be doing differently in this business so we don't arrive here again? What are we doing to increase revenue? What are we doing about costs? And some of my clients have decided to put in like an in-depth quarterly catch-up with their accountant as part of their restructuring. Be touching base, because while some directors are well across their financials, others are not. And it's not unusual for them to say, I didn't realize the position was quite this bad. And what are we doing about it operationally and management wise to not arrive here again?
Well, actually, that leads me to my final question, I think, because you've just sort of triggered something. So the SBR plan has to be approved by the creditors, but the plan itself isn't just, hey creditors, or hey tax office, you get to lose 70 cents in the dollar. And if that's a $800,000 debt, then that's, you get to lose $560,000. The plan is also, here's how we're not going to fall into this trap again, and here's what we're going to do to make sure that the business is viable. So does that include a financial forecast? Does it include, as you say, one of the things we're going to do is meet quarterly with our accountant? To what extent, what other detail does the plan need other than you're going to lose 70 cents in the dollar?
Yeah, so strictly speaking, the plan pretty much covers just the financial offer to creditors. So what amount to be paid over what sort of term, and how frequently would it be distributed? What kind of cents in the dollar is that? But sitting behind that, in terms of how we explain the proposal to creditors, includes, as a very key part, how did the company come to arrive at this financial situation? Was there a business partner dispute? Has it been poor trading performance? What is it? And it's usually a combination of factors. And then another key component is, what is the company going to be doing differently from here to not arrive at this situation again? And even though it's not strictly written into the plan, it's definitely significant to the creditors evaluating the plan as to whether they might support it.
All right, and I'd like to throw in that part of making sure you're not going to find yourself in this position again is if you've got a good cash flow financier standing behind you. All right, Louisa, thank you very, very much for helping us out to understand more about what small business restructure means, given that there's so many of them. As I said, 205 I counted for the month of August alone. A lot of finance brokers and accountants will suddenly find their clients going through this process, and they're going to be looking for some resource to find out what it means. So hopefully we've provided a little bit of that to them today.
Thank you for having me. I hope it's been useful.
Okay, thanks a lot, Louisa. Cheers.